Good morning and happy new year. Welcome to Stock Market Today. It's Monday, January 4th, 2021. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for that free email where I get a lot of the content for this show. We also give you stock ideas to consider. Hit your inbox every trading day before the market opens. So, feels like a long time ago. It's happy to be back, but U.S. equities finished higher on Thursday, rallying into the close of the final session for the year. Stocks had some strong gains for 2020. NASDAQ rallied about 44% on the year. Russell 2000 up 18% on the year. S&P 500 and Dow closed at record highs, gaining 16% and 7% on the year, respectively. For Thursday, Treasuries were stronger. The dollar saw some solid gains against the euro, was also better against the yen, although was weaker against sterling. Gold finished the day up 10 basis points. Crude oil finished the day up 20 basis points. Outperformers at the sector level: utilities, financials, and REITs. Underperformers: energy, discretionary, and tech. Now, as we get to the desk this morning, first trading day of the new year, kind of interesting, right? Because there was a lot of action over the weekend. With Bitcoin trading up aggressively. Kind of easy to forget that equities haven't traded in 4 days. However, as we get to the desk this morning, S&P futures are up 60 basis points, near their best levels of the morning. And that comes on the heels of Asian markets, which were mostly higher overnight, led by South Korea, Australia, Taiwan, and China. European markets are seeing strong gains to start the year. Treasuries are unchanged to slightly weaker, continuing that trend. Dollar is under pressure, continuing that trend against both the yen and euro. Gold is up 2%. WTI crude is up 90 basis points. Do note that crude oil was down 20% last year. So not a ton of change for the bigger picture trends here this morning on the first official trading day for traditional asset classes of the new year. Now, as we dive into the charts, trading at record levels to start the year, not a ton has changed, right? Just because the calendar flips doesn't mean views flip. All right, we kind of dive right in and continue with the trends that are in place. SPY has supported 360, then 340. I think if we're above 340, we're playing for 413 on SPY. It's pretty simple. That doesn't change just because we're in a new year. For the Qs at the bottom of the chart, 260 is key. 300 is important in the near term. IWM, 170, 160. No change to our trend views as the new year begins, right? Why would we change them, right? The trends are in place. They remain in place. The roadmaps that we've been laying out, I think a lot of people get caught up in the new year and what could shift and what are your views and what are your predictions. I don't predict. It's a roadmap, right? By now, you know that. You've been watching this show for a long time. Many of you have been reading my work and following me for a long time. I don't predict anything, right? Because to predict would imply that you have the ability to see the future. And nobody has that. And if I had that ability to see the future, you can bet your last dollar that I would not share what I know with anybody, right? I would keep that for myself. I do like talking about the markets and sharing my thoughts and ideas. However, it's a roadmap. It's a probabilistic approach, and it will continue to be a probabilistic approach regardless of what year we are in. Trend is in place. Our views remain the same. Let's take a look at our market in a minute now. What are we writing about in the note today for Chaikin Analytics clients? I haven't written in 10 days, so nice to get back in gear. SPY ends the year at record levels. I mean, what can you say? That's bullish. That's an uptrend, right? Back in September, we started talking about positioning for upside into the end of the year, and the market closed at a record level. I pat myself on the back. I'll take a little bit of a lap on that one. Not really my style, but hey, every now and then you have to. Qs actually get their rating upgraded to bullish to start the year. QQQ had been a neutral rating for the past 2 weeks, but it flipped over the weekend to a bullish rating. So we'll see now if large cap tech continues to reassert that leadership. Last time I was on this show on a Monday and I was doing my my work across major markets, we were starting to see the Qs reassert leadership. And that's continuing to play out, and that played out last week. So we'll see how that trend evolves as the new year begins. Treasuries and the dollar remain in downtrends. Those are your haven assets, in my opinion. Treasuries have been under pressure. Our rating has done a great job of picking up the shift in the fixed income market, where treasuries have all turned bearish, while the higher risk areas of the fixed income landscape, think high yield, think bank loan, think fallen angels, have all shifted to bullish ratings. The dollar, we've talked about that for a long time. Dollar inverse correlation to risk assets remains in place, and the dollar is under pressure here this morning. Gold is consolidating. Oil is moving higher as commodities are strong, right? You've heard me talk about commodities, the inflation theme in particular in ag. For those of you who saw the great compilation of videos to end the year that was produced by Stock Charts, my topic was the ag theme that I've been pounding the table on since June. Still like it. Still like commodities in general for those who run diversified portfolios across asset classes. If you don't, you still want to pay attention to the equities that are leveraged to commodities. We talk about those quite a bit. Futures point to a higher open to start the year. Let's hit the major indices from a power bar perspective. The Dow added 55 basis points, 3-1 bulls to bears. S&P up 60 basis points, 123 to 41. So about 3-1 bulls to bears on the S&P. NAS, slight underperformer on the day. On the final trading day of the year, 17 to 9. Small caps unchanged. Bonds uptick. Utilities leading group on the day. Okay. Who knows what hard to read anything into the final week trading, right, with everybody on holiday. But utilities were strong. They were up 1.5% last Thursday. 6 to 8 bulls to bears there. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Let's hit our stock of the day. One that I'm highlighting in my note today, going to call it out here on the show as well. PerkinElmer, PKI, the ticker symbol, closed at 143.50, up 2.08% on Thursday. Has a very bullish rating here at Chaikin Analytics. Strong trend above our rising long-term trend line. Strong industry group as healthcare equipment, life science tools, services has been a bright spot within the healthcare space, along with biotech. So what I see here is a very bullish stock that is outperforming the market. Check out our relative strength, starting to pick up a little bit here in the near term. Overbought, oversold indicator beginning to curl higher in an oversold position, while money flow is solidly bullish. And we trigger one of our alerts today, a money flow buy alert, telling our clients to wake up. This is a potential idea that you may want to take advantage of if it fits your style. This one looks interesting to me. I see a pullback within the context of an uptrend that produces an oversold condition, right? One of my least favorite terms in the markets is buy the dip. I would be a buyer on weakness, right? You hear people say that all the time. It makes utterly no sense, because what is a dip? How do you constitute it? How do you measure it? Well, we do that with our long-term trend line, as well as our overbought, oversold indicator. We want to buy oversold in an uptrend. And in particular, we want to buy when the overbought, oversold indicator is rounding higher in an oversold position within the context of an uptrend. That's a higher probability setup for me. That looks compelling. That looks interesting. Those are the types of situations where I want to take advantage. So PKI is one I'm calling out today. Let's hit our sector tracker now. Moving to the major sectors over the last 5 days. I go away for a week, and you all let the defensive groups get to the top of the list. Utilities and REITs, top 2 spots. All but energy higher over the last 5 days. Comms and fins round out the top 4. Discretionary healthcare materials, middle of the road. Staples, industrials, tech, bottom of the list. Energy, energy after getting a lot of traction from us, as well as a lot of other smart people. Seeing a little bit of a consolidation, a little bit of a pullback here in the near term. We'll see how that plays out. Still looks compelling to me, though, here in the near term. Industry and focus today. Dow Jones REIT Services, past 6 months, been a dog, down relative to the S&P by about 10%. However, power bar ratio is shifting here. 12 to 9 bulls to bears on the ratio, number 18 of 21 subsectors. Moved up 1 slot over the last week. If you're looking for some names there, maybe Piedmont Office, City Office, and American Homes for Rent, PDM, CIO, and AMH respectively. Fund itself, not all that compelling to me. Still not above those May-June highs. Consolidating, bearish money flow, bearish relative strength, neutral rating at best. Trend is okay above the trend line, but to me, better opportunities out there. This one needs time to prove itself. Maybe it will. Who knows? Maybe we'll start to take a defensive stance to start the year. I don't know. Anything can happen. Anything happens all the time. We want to pay attention for the trends. And right now, this one is a flat absolute trend and a laggard on a relative basis. Tells me there are better opportunities out there in the marketplace to put money to work to start the year. I got to tell you, news flow was light, not a ton that I could tell. Western Digital up 11.8%. Nothing company specific there. We'll note that Micron, number 3 on this list, up 4.5%, does report earnings this week. DXC, nothing to say. Mosaic, part of the ag theme that I was talking about. So even if you don't like commodities to invest in them, even if you don't like buying commodity ETFs, you can take advantage of the themes through the equity market. Just do a Google search. What stocks are levered to agricultural commodities? And you'll find names like Mosaic, MOS, Corteva, CTVA, which I own. I do not own Mosaic, but I own Corteva, MOS up 3.8%. VTRS, nothing company specific, stock up 3%. Loser side of the board, Oxy down 3% under pressure of late. United, Etsy, APA, and Lamb down, between 3.15 and 2.5%, respectively. Nothing company specific that I could see driving trading in those names on the final day of the year. Let's see how they respond. Let's take a look at Treasuries under pressure, curve steepening. I wanted to just run through it. IEF is the one we pay close attention to. That's roughly a proxy for the 10-year. And you can see it's just been trending lower since the August time frame, right? Risk assets are trading higher. The dollar is trading lower. We'll take a look at that. And it really is it's across the curve, but it's more pronounced. The sell-offs have been more pronounced at the long end here, TLT, under more pressure, right? Whereas the short end of the curve has been relatively stable. So what has that done? That's produced that steepening yield curve. What does a steepening yield curve mean for equity investors? Well, it's generally bullish for financials. That's why you've seen the banks perk up of late. To me, it's generally a proxy for investors' appetite towards risk, right? If the curve is steepening, could also point to prospects for better growth being priced into the market, being priced into the economy within the markets. Now, you've seen me talk about that copper to gold ratio, which has been working higher over the past few months as well. So some confirming data points there as it relates to what investors are expecting on the economy. Now, we are going to get a ton of economic data this week, PMIs, ISMs. We're going to get the non-farm payrolls report on Friday. So we'll see if the data is confirming investor expectations or if it's purely a function of stimulus and monetary policy. Going to be an interesting week. Commodities, you've heard me talk about them. DBC is broad-based commodity ETF, and it's continued to grind higher. We highlight it every Monday in our note. We featured it. We've been talking bullishly about it. Broad-based commodity exposure can be gained through something like DBC, although I urge you, if you're not familiar with how the products work, to get yourself familiar with how the products work before you buy them. Now, we can kind of get a little more granular as well. DBB is base metals, right? Remember what I said just on the last slide about prospects for better economic growth? Well, you'd see that in base metals, and you are. Take a look at DBB. Consolidating within the context of a solid uptrend off those March lows. Bottom of the chart has been our favorite theme, DBA. Those are the agricultural commodities. That's things like wheat, corn, soybeans, right? Sugar, cocoa. It's so you can drill down on the individual commodities themselves, take a broad-based approach, or you could look at names like Mosaic, Corteva, Deere, Cat, right? A lot of ways to play the theme in the equity market. Some of the potash names, right? Think about fertilizer, et cetera. So we try to point this out, but I think it's really instructive for investors, if you believe my views and if something sounds interesting, right, to start to dig in and do that work. A ton of people who follow me, who are clients of Chaikin Analytics, who think that way, and it's great to watch. It's great to chat with those people as they delve into the process. Let's leave it with the dollar. There it is. Now, dollar tried to rebound on Thursday, a little bit of a bullish divergence on the RSI, but under pressure again today. You can see it here. Dollar's been falling since March, and risk assets have been rising since March. That inverse correlation remains in place, so we'll see how that plays out as the new year gets underway. That'll wrap us up. Take us for a test drive, ChaikinAnalytics.com. /test drive. Happy New Year. Happy, safe, healthy. I will be back tomorrow. Have a great Monday, everyone.